Hey, good morning, everyone. Marty Bazori here. Friday, May 27th, 2022, little less than an hour after the market open. I thought I'd pop in and just do a quick technical analysis for you, separate from the economic analysis that we're going to get working on here right after I'm done. Lately, I've been adding a market snapshot at the end of that. I think I'll try to keep these two videos relatively short. I want to keep you engaged start to finish, so I thought I'd just pop in again and do the quick technical analysis first. And then probably this evening, tomorrow morning at the latest, you'll get our usual economic update. So, folks, things are playing out pretty much like we anticipated, or at least like the charts anticipated for us. You know, we were looking right here as we were reaching this level as probably an area that was going to be some pretty strong buying. And recall that I actually suggested that we could make it all the way back to 4,300 before we run into some serious resistance and probably lose it right there. So we still view this as what we'll call a bear market rally, but certainly a strong one. And recall, I said if we break out of this downward wedge, because we had these bullish divergences with some momentum, it would likely be something sustainable, at least for a while. And we're getting that. And a couple things that are beginning to develop, right? You could say that if you really believe in these wedge patterns, and I continue to draw them, seems like we could be having one develop right here, although we could break out of that to the upside. On the other hand, when we go from here to here, right, we're actually looking at a bullish divergence in both of these. That's just hugely bullish, right? So we were right here, we were beginning to roll over. We were losing this high level right here, but the momentum indicators were saying, no, this is a very bullish setup. And we gapped out of that this morning. And so now we have a higher high. But, despite perhaps this growing wedge pattern right here, this still looks pretty good. This looks, technically bullish to me. And of course, that's going to change, but I'm just telling you as we see it right here. And of course, it could change on a dime. It's a very dynamic world we live in right now with regard to markets. Well, with regard to everything. But yeah, these things can turn rather quickly. And on the daily chart, we had a falling wedge, bullish divergences. Remember, I had that as a dotted line the other day. And I said then, we break out of this and with some momentum, and it could be special. And yeah, so far, so good for the bulls. We broke out of that huge day yesterday, picking up where we left off today. In the morning note, I talked about the PCE data, and that no doubt was bullish for the market. It showed somewhat slowing inflation. And I think anything that didn't show inflation surprising to the upside was probably going to be bullish. Again, technically, this market was ripe to go higher, continues to be by our estimate. Doesn't mean it's going to happen, but continues to be by our estimate. I like that 4,300 as the maximum upside right here. And we'll continue to explore it and explore the technicals as we get there. Let's just go to the weekly. So on the 3-year weekly chart, recall that when we test this back 30 years, pretty good odds that we're going to go down and test this 3,500 range before it's all said and done. But we did call this, this snapback rally, or we just expected it. Right off of that 38.2% retracement, which was 38.15, just right on the nose is where this rally began. These Fibonacci retracements are important to look at from a technical perspective, and you want to look at them in both directions. So we've had quite the sell-off here. Intraday, we had a bear market, but not on a closing basis. So if we put our retracements in here and move them back up, notice the 38.2% retracement is right about 4,200. This rally may actually stall and come back down. That would be a logical level. But the 50% retracement is perhaps even more respected. Falls right on that 4,300 line. For our purposes, folks, this is just short-term stuff. We're managing and hedging as if this market's going to go lower, because that's what our overall macro, fundamental, and technical analyses tell us that we should be doing right now. Now, we have taken advantage of this pop right here. We actually went in and bought some calls right near the bottom, short-term, out-of-the-money calls. And what they've effectively done, because they've been so profitable, is allowed us to keep our all-important downside hedge pretty close to the money, therefore pretty meaningful right here. And then I'll close here once again. Remember the last video I broke out this chart of the NASDAQ Composite Index. Every circle for the last 30 years is where it got into oversold territory on the relative strength index. Every single time it did that, we had a major pop. A couple huge bear market rallies, over 40% during the tech bubble bursting, 28% rally in here. Wow, the market was falling apart during the mortgage/real estate bubble bursting. Worst bounce in all these years was like a 14% bounce. And so far, this one has bounced all of about 9% off the bottom. So again, a good bounce, no doubt about it. But if it stalls here, it'll be the worst one off of this setup in the last 30 years. So again, I think it makes sense that this goes a bit higher before, unfortunately, it ultimately gives up the ghost. I'll leave it there for this morning. Look later this afternoon, like I said, or this evening, or tomorrow morning at the latest, for our all-important weekly economic update. Thanks, folks, as always, for watching and listening. Be back soon. Bye-bye.